Alright YouTube, welcome back to another trading video. Now today's seminar, as it's going to be, because it's going to be a bit of a longer video, I'm going to be breaking down how to build a trading strategy in 2026. As I know, most people come into this industry with a lot of questions. They don't really know where to start, they don't really know where to go. And so I thought I would build out a bit of a framework, a bit of a foundation for you all to build on. And once you have these in place, you can add your own tweaks to them and then build consistently from there. So like I said, this is going to be a pretty long video. I'm just going to be going off the cuff here. I don't really have a script or too much of an idea of what I'm going to talk about. I'm just going to be going off my experience in here and what I've found works for me and what I've found that's worked for other people as well. So how to build a trading strategy in 2026. I guess firstly, we must understand what is a trading strategy and what makes a good trading strategy. So, as we all know, we are all individuals. We have our own different personalities. We have our own ways of looking at things and experiencing the world around us. So, what you must remember is certain strategies do not work for everyone, and they don't work for everyone's personality types. Someone that is very fast paced, they're not really going to do well with a swing trading style strategy, right? Because they're going to struggle to stay patient. They like to be doing stuff and they perform well when they are doing stuff. And then vice versa from someone who's a bit more laid back, they don't like to rush their decisions. They like to take a bit more time. That person is not going to do well with a scalping strategy because, they're going to have analysis paralysis. They're not going to be able to execute very good just because of their personality. So first thing you need to understand when you're building your own trading strategy is your personality, right? So what sort of individual are you? Are you, someone who likes fast paced, someone who likes to be in and out quickly? Or are you someone who likes to have a bit more of a slower approach? You can't dedicate as much time to the charts. You can't be looking at the screens hours and hours on a day. So you need a slower, swing style strategy, right? And so these are things you need to know first and foremost. Then you can start getting into the nitty gritty of things. Obviously, I'm not going to, go through technical parameters that you shouldn't have. Ultimately, that's going to be, something for you to figure out. This right here is going to be like the framework of a good strategy, a good system to have in place. So your strategy needs to match your personality, right? First and foremost. All right, cool. So next, you're going to want to figure out what markets you're going to be trading. So whether that's FX, whether that's futures, whether that's commodities, what are you going to focus on? And again, each of these markets have their own personalities. So each market performs different. So if you're looking for a more fast-paced in and out style market, futures might be the way to go. So equities, gold, those sorts of things. FX is a little more slower paced. It can be a little bit choppier. And so that might be better for a swing style for you. But again, find out the personalities of these markets, see which one is going to fit best with your strategy. And again, when you come back to testing your strategy, you can test it on a multitude of markets and you'll find what works and what doesn't. Because at the end of the day, a strategy doesn't necessarily work in every single market, in every single market condition. Okay, so you have to apply these carefully to different markets. Don't just assume just because it works on one market doesn't mean it's going to work on another. So never assume, always gather data and then make decisions based off that data. So you need to have a clear idea of your personality, a clear idea of the market you're trading, and then we get into the frameworks of things. So what rules do you need to have in place for you to be able to consistently apply an edge and consistently execute? So the rules that you need in place. What sessions are you going to trade? So are you going to trade London? Are you going to trade Asia? Are you going to trade New York? Which sessions are you going to trade? And again, this is going to come back to your personality and your how much time you can commit to trading. Obviously, a lot of people work jobs, so they're not always going to be able to trade. London session, maybe they'll be able to trade the tail end of New York. Maybe they'll have to trade Asia. And again, this will come back to your style of trading. So if you can't trade London or New York, switch to a swing style, because that's what I did when I was trading and I first started trading. I was working a job. Swing trading was the best approach for me because it allowed me to consistently execute trades, and it minimized me missing trades. So I didn't miss as many trades as if I was trading how I am now, which is a more intraday style of approach. So bear that in mind when you are, putting this all together. So the next up is, I guess number of trades that you're going to take. Again, this is all going to be dependent on your strategy. So what I would say is, how much percentage are you willing to risk in one single session? So in one trading day, how much are you going to lose? So maybe you can have a 2% stop out in a day or a 5% stop out in a day. Maybe not 5%, could be a little bit too much. 2 to 3% as a daily stop is probably a good idea, right? So not necessarily based on the number of trades, it's based on your overall percentage loss. And again, this is then going to come down to how much you're willing to risk on those trades. So if you're scalping, you're probably going to want to be risking a little bit lower to give you that extra breathing room, because obviously you're going to be executing more trades and you're going to be experiencing more losers. And if you're, maybe on a swing style, maybe you can risk 1 to 1.5% per position, right? But again, these are the nuances that you're going to have to figure out for yourself. Alternatively, you can learn someone else's strategy. That is also probably the better option. But, for those of you that, you can't always invest a huge amount of money, you're going to have to figure this out for yourself, and you're going to have to go through that process yourself. Okay, so then once we've figured out, our daily stop out and the risk that we're applying to each trade, what's next? Next point of call is obviously going to be the time frames that you're trading. And again, I'm not really going to get too much into the technical of the strategies because, it's going to be different for everyone. So I'm just trying to lay a bit of a foundation here in the frameworks for you to do that. The goal is ultimately to have clear rules. Once you have these rules, it's important to backtest. Very, very important to backtest. A lot of people say, backtesting is pointless, bad, waste of time. Bollocks. It's not a waste of time. Backtesting gives you the confidence and it affirms that you actually have a positive expectancy, right? Because that is what matters in trading, having a positive expectancy. And what is a positive expectancy? It's just a statistical advantage over a large sample of trades, over a statistical number of trades. So if you don't backtest, how do you know if you even have an edge, right? You don't. Unless obviously you're trading discretionary trading, and then it's very, very difficult to know, again, if you have a positive edge or not. So once you have your strategy defined, have clear rules for it. All right, so let me put very, very clear rules. Clear rules. And clear rules means an ABC approach. So what does this mean? If A happens, I do B and manage with C. Okay, so have a clear set of rules. Mechanical approach, right? Stop trying to go down the discretion route just yet. Okay, hold your horses. Right, you got plenty more years to learn how to trade. Keep it simple. Simplicity works in the beginning. Then if you want to apply some more technical concepts, absolutely fine, do that. Once you have these clear rules, once you have this clear structure to your trading, apply that in a back test. Very often what I see is people have somewhat vague rules and they'll apply it in a back test and they'll have great results and they'll think sick. And then they'll come to a live market and they're unable to replicate those results. And very often it's because they have these very, wishy-washy rules that they can't really define. And so in a back test, it's all great because they'll mark, oh yeah, I would definitely take this trade. When in a live market, they probably wouldn't. So it's very important to align your back tests as clear as possible as to how you're going to be trading in a live market. Okay, then that's going to create that confidence that, okay, I do have an edge here. I do have the confidence to execute this because I've seen it work in a back test. Then you can continue to apply this in a forward test, continue to apply it in a live market with a slightly lowered down risk, gain that experience, gain that extra confidence, then you can start playing around with your risk model. Okay, so once we have all the technical parameters in place, all of the chart patterns and the sessions and the number of trades and the markets that we're going to be trading and how we're going to be trading those markets, we need some stop outs in place. So we need some rules, we need some habits that we can build to put in place to, number one, stop us from emotionally trading, stop us from over risking, stop us from blowing accounts, going on tilt. We need to put these stop outs in place, these measures in place, so we can build those habits. So again, we did speak about before about having a number of trade, a daily stop out. So 2 to 3%, whatever that may be for you. Having that stop out and then actually walking away. Because what happens with most people is they'll take a few losses. I'm just going to write this down. They'll take a few losses and they won't walk away. So they'll stay at the charts, they'll stay looking at the charts, and then they will. This is what happens when you look at a chart, your mind creates scenarios in its head. Not based on the information that you're seeing on the charts, but based on the emotions and your confirmation bias in your head. So you will actively look for things to either take a trade or not take a trade, right? And so this is why it's very, very important to have clear rules, because otherwise you will make stuff up in your head. I promise you now, you will make stuff up in your head. And so having these clear rules, right? And if they're not aligned, walking away from the charts. Stop looking at the charts. You don't need to be at the charts if there's nothing there. More screen time will not gain you more profit. I promise you now, it will not get you more profit. So walking away from the charts, cool. That's first one. What else do we need in place? Well, we need our expectations of our edge. So if we align our expectations with what we can reasonably expect from our strategy, that's going to help us with this fear, this FOMO, this revenge trading, this urge to get in the market, because we've aligned our expectations with what our strategy should do. So if our back tests and our forward tests, average us about 2 to 3 trades a week, and it's Monday and we haven't taken a trade, you come back to your edge expectations and you say, okay, it's only Monday. There's still 4 days left of the week. Let me take my time here. Let me wait for a setup. It doesn't have to all happen at once. Very often people come into a Monday and they just want to go, right? They just want to get the ball rolling, which is fine. But very often that's going to lead you into unnecessary losses, poor decision making. So Monday, take your time, take a step back, look over your back tests, look over your edge expectations. What are you expecting for this week? What can you reasonably expect for this week, right? Doesn't matter what you feel, what you think what should happen. Base your decisions and your expectations on the data that you've gathered. So next up then is having an identity. Right, and I am a very big victim of this. I held and I tied my whole identity to my trading. This was the only thing that mattered to me, and this was the only thing that I had in my life, and this was the only thing that I did. I didn't go out, I just stared at the screen all day, every day. And so the impact that this has on you is you become very attached to the swings in your P&L. You become attached to the swings in price, and so you become very, very emotionally connected and tied to the charts, right? And the more you can detach from, wanting this validity from the charts, this, validating your identity and your self-worth, the more you can detach from this, the better you're going to be able to perform and the better decisions that you're going to be able to make. And ultimately, as traders, we get paid on the quality of our decisions. We don't get paid on the number of decisions that we make. We don't get paid on how quickly we are to enter. We get paid on the quality of our decisions. And the quality of our decisions is based on the rules that we have in place and how accurately and how consistently we follow those rules. So identity, get a hobby, do something else, right? Whether that's running, football, going to the gym, ice baths, I don't know, whatever it might be. Find a hobby, find an identity outside of trading where you're not so reliant on everything in trading to work. And that's going to allow you to become less emotionally attached to the charts, to your P&L, and to everything that goes on in the market. I guess next one as well is having a stable income. So have a job, something that brings in the money. Have something outside of trading, because very often people rush the process too quickly. They go full time without the proper frameworks in place, without the proper savings, without the proper, expectations of what trading is. And then that's when more emotional trading happens. That's when you essentially can't do it because, you're emotionally attached to the outcome of each individual trade. Next up, what I think is quite a good thing to have is a network or accountability in some form. So whether that's a friend, whether that's a community, whether that's social media, whatever that might be, having someone to hold you accountable to your actions and to be like, you should not be doing this, I think is very, very important, because as we all know, trading is not like any other job. We don't have a boss telling us what to do, what not to do, what decisions to make, what not decisions to make. So you have to be very good at self-managing. And if you can't manage yourself, then how can you manage your money? It's just not going to be good for you. So find some form of network, accountability partner, a community, social media, posting on social media, whatever. On the topic of social media, stop scrolling. Once you have formed a system which has positive expectancy, which has a clear edge and a back test, which you forward tested, which works, and you can consistently execute, stop scrolling social media, because this will mess with your mind, because as we all know, everyone on social media is consistently winning, right? And even myself, I am a victim of this, that I will show my winners only, right? And I will always, post the good stuff, right? Because that's what social media is. Social media is a highlight reel. It's not real life. And it can cause havoc with your emotions because you think everyone else is doing insane and you're not. And, I felt the same, and I still very often do the same today, where you never feel like you're doing quite good enough, because ultimately there's always someone doing better than you. But it's not about comparing yourself with that individual. It's about comparing yourself with you and where you were yesterday, last week, last month, last year, right? And as long as you're getting better and improving, that's all that matters, right? That's the only thing that matters. Again, keep it simple. You don't need to overcomplicate it. Clearly define your rules in the beginning, right? Formulate a backtest around that. Gather some data around that. Good quality data, okay? Don't make discretionary decisions in a backtest. Just because it's a loss, it doesn't matter, right? Take the trade regardless. Take the trade if it fits your rules, gather the data, and then you can build from there. Your backtest doesn't have to be insanely good, right? It's just a base for you to build on and to continue to grow as well. Actually, one thing that I did forget to add is the journal, right? Very, very important concept to do. So you want to be journaling not just your trades, but your psychology as well. So you want to be journaling how you feel in the morning, how you feel in the afternoon, how you feel in the evening. You know, what could I have done better today? What did I miss? Did I not step away from the charts when I should have done? You know, did I not follow my rules? Why did I not follow that? You know, and do both psychology and trade. So the technical and the mental as well. And then you can continue to build and grow from there. Again, trading is not a get rich quick scheme. It's not a quick way to make quick cash. You know, you can't rush this process. It takes time. It can take years and years and years, right? So I'm not here to sugarcoat it. This is not easy, right? This is not an easy undertaking. So please don't take it lightly. Take this very, very seriously. This is a professional business. You know, you're up against some of the smartest people in the world, right? So if you're not being serious about this, you're gambling at best. And so you're better off just going to the casino and actually enjoying yourself with other people, right? This is not the space for gambling. Take this seriously, execute consistently, and maybe then you'll be able to make money from it. But that is today's video. I hope you did enjoy it. I hope you took some value from it. I know it was a bit of a long one, but it was quite enjoyable to go through this. Any questions, comment down below and I'll be sure to reply. Appreciate everyone for watching. Drop us a like, subscribe, all that good stuff, and I'll catch you in the next one.